cash is few and far between in your business because you don't have a forecast. Period. Like if you had a cash flow forecast, you'll be able to have the ultimate financial visibility and you'll be proactive. And so things that could be detrimental to your business, they wouldn't even be a factor because you would fix them before they could hurt your company. Am I right or am I right? I'm pretty sure I'm right. I hear you said I'm right. Matter of fact, put in the comments and say, Octavia, you are right. Well, listen, I want to show you today how to create a cash flow forecast. Now, make sure that you like and subscribe and you leave comments as you're learning how to do this. And I've provided you with a plug and play template that you can use in your business right now. Welcome to the Say Yes to Profits podcast. Here's where you will learn how to manage and master your finances so that you smile when you log into your bank account. Say Yes to Profits is a full-service accounting, tax, and CFO firm. Our mission is to stop entrepreneur failure and create profitable CEOs. Tune in each week for new financial, business, and tax strategies. Listen, it is past time for you to say yes to profits, so let's jump in to this week's episode. Now, here's what you must understand. Before we actually get into the template, there's some things you need to know about cash. Because if you're not clear on this, you can make some mistakes that will prevent you from scaling your business and truly being able to not only say yes to profits, but also say yes to cash. So I'm going to share my screen so that we can go over all of the components, and then we're going to create your cash flow forecast. Again, click below or go to sayyestopprofits.com/toolkit to get access to the plug and play template. Okay. Now, I want you to know something. Did you know that 82% of businesses, profitable businesses that is, fail? Why? Because they simply run out of cash. They have cash flow problems. This statistic is from the SBA and SCORE. And a lot of these companies are profitable. You see profitable there? Yeah, they're profitable. But you can be profitable on paper and still not have enough money in the bank. You see, your income statement could definitely show at the bottom that you are profitable and you're happy and you're celebrating. And then you log into your bank account and you're like, Papa, where's my money? That is because you may have some financial management and cash flow management problems that you need to fix. Now, what I need you to understand is that cash is your business's superpower. Okay. Profit is how you keep score in business, but cash is your business's superpower. And so you want to absolutely say yes to profits, but you also want to have an excess of cash flow at all times. This is why you need to create and maintain a cash flow forecast. You see, when I was going through my broke, busted, and disgusted period, this was one of the things that I started to do. Matter of fact, I actually developed a framework that we use for all of our clients, right? It's the 6 pillars to say yes to profits. And guess what one of those pillars are? You see them, it is cash flow. Because again, if you don't have an excess amount of cash flow, if you don't have enough cash flow, if you don't have more cash going in or coming in than what is coming out, you're not truly able to say yes to profits in the way that you need to say yes to profits. I'm talking about when you're able to log into your bank account and smile because you have an excess of money there. That is what we mean when we say we want you to scream, say yes to profits. Okay. And so understanding, creating, and maintaining a sound financial foundation in which your cash flow is always in excess is so uber important. So I want to show you again the components of the forecast, and then we're going to create the forecast. So the first thing that you need to understand is that cash and profit are 2 different numbers. All right. And so profit is the money left over after you subtract your revenue from your expenses and your COGS. All right. You're either going to have a net profit or you're going to have a net loss. A net profit meaning you earn more in revenue than what you spent out in costs and expenses for that particular period. A net loss mean you spent more money out in expenses and COGS than what you brought in for that particular period. And your COGS are your direct costs. These are your out-of-pocket costs associated with providing that service and that product. Your expenses are your everyday operating expenses. These are the expenses that you have, whether you have one client or 1,000 clients. Then you have your cash. Your cash is the money remaining after you subtract your beginning cash balance from your net profit or your net loss. Now, what does this look like? Let me show you. So for this particular example, this entrepreneur started with a cash balance of $60,000, right? Their income statement showed that their revenue earned for this particular period was $50,000. Their expenses and COGS totaled $40,000. That means they have a net profit of $10,000. So their ending cash balance, as you see here, is actually $70,000. How and why? Because they took their beginning cash balance plus their net profit, and they gave them an ending cash balance of $70,000. But let's flip this around. Let's say the beginning cash balance is still $60,000, but the revenue that they generated was $40,000. Okay. Let's say the expenses came to $50,000. That means they actually have a net loss for that particular period of $10,000. Now they have to take that net loss and subtract it from the beginning cash balance of $60,000, which is going to leave them an ending cash balance of $50,000, right? So whenever you generate a net loss, it takes away from your cash because then you're having to pull money from other periods, other times, and your balance basically to cover the expenses and the costs within that period. And so it's important that you always have a net profit, hence say yes to profits. And it is important that you have an excess of cash flow. Let's continue. The next thing I need you to understand is how money moves in your business, which is in two ways. Money enters your company in three different categories. Money exits your company in a certain way as well. You're going to see that in just a second. So money enters one way with operating. So these are all of your sales and all of your revenue. In financing, these are the loans and the lines of credits that you receive. And then in investing, these are the funds and the grants that you receive. Or money leaves your business in those exact same categories, but in different subcategories. For example, operating. Money leaves with your COGS, your cost of goods and services sold, and your expenses. At financing, money leaves with your loans and your other debts. And then investing. Money can leave by your owner's pay, especially if you are an LLC single member, then your pay is not going to be on your income statement. But if you're an S Corp, then your W-2 pay can be on your income statement. And then if you take distributions, that'll actually be on your balance sheet. Okay. And if you have shareholders and stockholders that you have to pay, money will leave it that way as well. The bottom line here is that your cash inflow should always exceed your cash outflow. Are we clear? Let me know in the comments if you have any questions. The next component that you need to know before we get to the forecast, you need to understand your financial reports. Now, I am not going to deep dive heavily into this because there are separate episodes on the Say Yes to Profits podcast where I talk about your different financial reports and details. And so you want to go back and watch that. Okay. I'm just going to give you a high level overview here so that we can get to the plug and play forecast. The first financial report is your income statement, right? This is your revenue, your expenses, your profit, your loss for a specific period of time. Okay. With your income statement, that period can be monthly, quarterly, yearly, right? You can use your income statement for so many different things, but it's going to show if you have a net profit or a net loss. Then your balance sheet. Your balance sheet shows the true financial health of your business for a specific point in time. So your balance sheet may be as of December 31st of 2025. right? That specific point in time. And it identifies all of your assets, everything that you own, and all of your liabilities, everything that you owe, and your worth of the company, your equity, right? When you put these two together and you look at your cash flow forecast, all of this has to deal with cash flow. Your profit and loss statement is your revenue, your COGS, and your expenses. Your balance sheet is your assets, right? Your bank account balances, your checking account balance, inventory, accounts receivables, your owner's equity, your loans payable, your credit card payables. Bottom line, all of this is cash that flows in and out of your business that is showing on these separate financial statements. The problem is that most entrepreneurs only look at their profit and loss statement. They're not focused on their balance sheet. And that is a huge mistake. You want to look at both. All right. So to get access to the plug and play template, you want to go to sayyes2profits.com/toolkit, sayyes2profits.com/toolkit, and you'll get access to this plug and play template. I'm going to bring it over so that we can go over it. Okay. Here's what you need to understand on this, right? What you want to make sure that you do is that you plug in all of the numbers that are uber important and that is going to come in and out of your business. Now, if you are in the Profit Club, you have this plug and play template. You don't have to download it from the podcast. You have this plug and play template plus some other spreadsheets and components that will go with it, okay? If you are one of our fractional on-demand CFO clients, you know we come to the table with this already done and then we go over it with you, all right? So I want to make that clear for all of our clients, whether in the Profit Club or our fractional CFO clients that are watching this episode, right? If you're not either of them, click below, go to sayyes2profits.com/toolkit to get access to this toolkit. Now, let's complete it. So you can complete this as of every single week or every single month. Totally up to you, your preference. I put it for 11 weeks to start, okay? What you want to do is you want to look at the balance in all of your business accounts as of the date in which you started. So let's say that you started as of today and the balance is $30,000, right? We will enter that there. Now, the way I've set this up is going to show you your revenue and your expenses and your net profit or net loss. And then you have to enter the other forms of cash, okay? That's why I went over all of that in the beginning so that when you get to this part, you're perfectly clear. So let's say for your revenue, you have revenue stream 1, and that stream is your consulting revenue. And let's say you know you're going to bring in for this particular week $10,000, right? We will put that there. Let's say you have a product. So we're going to say product 5. Okay, 3. I typed 5. I said 3. And let's say this is a course. And you know that this is going to bring in $1,500. You will put that there, right? See how that's done? But now you have expenses. So let's say you have rent, you have office supplies, you have Facebook ads, you have a marketing consultant that you have to pay, you have an admin assistant that you have to pay, and then you have your CFO team that you should have, right? So we're going to put those here because these are everyday expenses for your business, okay? And then let's say you have COGS and you have software. You signed a new client and this is your COGS software. So you're going to put that there too. So now let's put some numbers here. So we have office supplies. You want to spend $1,000 in marketing, ads, $2,500 for your consultant. Your admin is $2,000. Your CFO team, let's say you pay them in week 3 and it's $3,500. And then you sign a new client, and each time you sign a new client, your software increased and it increased by $250, right? So now for this, you have a total revenue projected of $11,500. Your total expenses for this week, $9,400. Now you have a net profit of $2,100, but you're not done. Now you have to enter other ways money is going to enter and exit your business. So let's say you have a credit card payment that you have to pay and you want to receive a payment yourself. So you enter those. Now here's what happened on the spreadsheet. It is going to factor all of this in, right? And once it takes the $30,000, it adds the revenue, it subtracts the expenses, it add any other additional cash that's coming in and subtract any cash that's going out. It leaves you with a balance of ending cash of $26,500. So for this particular week, you have a net profit of $2,100. You have an ending balance of $26,500. Now we're going to enter more information. So let's say you know that you're going to make another $1,500 here, but no more consulting revenue. Let's say we're going to put your CFO here for the purpose of this example. We're going to add your attorney here that you have to pay. Okay. And then we're going to say that you're going to receive a loan as well. Right. And so now you have a net loss, right? Because you only had $1,500 that came in this week, right? But you had $6,000 that went out in that week. So now you have a net loss of $4,500. You have a loan that entered your business and you want to pay yourself again. Okay, so we're going to put that there. Now, when you factor all of that in for that week, your ending balance is $22,000. Your net loss for that week on your projected income statement would be $4,500. See how this works? You're going to go through and you're going to enter all of the information that you know is coming up for the next several weeks or months in your business, depending on what period that you're using. The benefit of this, you all, is that it allows you to become proactive and it allows you to gain the ultimate financial visibility to see in the future of your business. And now there are no unwanted cash flow surprises. You see how this works? This is why it is so important to create a cash flow forecast for your business. So I want you to use the plug and play template and create the cash flow forecast today. And then I want you to stand back and look at it, right? Put all of the numbers in there and look and see where there are going to be weeks or months where cash is few and far between. Where there are going to be weeks and months where you have a net loss instead of a net profit. Where there are going to be weeks and months where you're spending money that you really shouldn't. There are going to be weeks and months where money is not coming in the way that it should. Now you're seeing this in advance, and now you can do something today to prevent your future from being detrimental, to prevent your future from having financial worries and no cash flow, which is what we don't want, right? So download the plug and play template today. Go to sayyesToprofits.com/toolkit. Download that. Let me know any questions, any comments that you have, right? And like and subscribe to this podcast. Like and subscribe to this episode as well. And share this on your social media outlet. And most importantly, I want to hear from you. Tell me your thoughts. Tell me your questions so that we can make sure that you scream, hello, say yes to profits. Okay. This has been Octavia Conner with another episode. Thank you so much for tuning in. Make sure you like and subscribe as well. And until next time, say yes to profits, everyone. Toodles. Thank you for tuning in to another episode of the Say Yes to Profits podcast. Now it is time for you to make money moves. Take action based on what you learn. Now see you on the next episode. Say yes to profits. Toodles.